Good Monday morning, traders. Mark Treadway here with your global commodities overview for October the 13th, 2025. After a weekend full of market-moving developments, let's break down what's driving today's open and how that shapes the trade across oil, grains, metals, and macro risk. Oil has dropped sharply as geopolitical risk premiums unwind. Over the weekend, Israel and Hamas agreed to the first phase of a US-brokered Gaza ceasefire, relieving some of the supply disruption worries that had underpinned recent price spikes. On the technical front, open interest surged as crude dropped, with further downside possible. Goldman forecasts an inventory build-up of 1.5 million barrels per day into Q4, and OPEC's August output rose 509,000 barrels per day as they unwind earlier cuts. If you're trading oil, think about staying nimble on the short side or deploying exposure into the refined and downstream margins. Watch for volatility into upcoming OPEC meetings and any renewed geopolitical shocks. Moving to grains, the US harvest is progressing well and world production is solid across wheat, maize and soy. However, EU exports have slowed. Black Sea supply is up and US row crops face competition from robust Brazilian output. Wheat and maize spot and future prices continued to soften, with Chicago contracts down 4 to 5% on reduced export demand and positive crop weather. If you're long grains, consider lightening exposure or using storage, hedge strategies, to capture carry, especially in corn. For soy and canola, look for opportunities to roll hedges or take advantage of basis moves. Metals are the show stealers this morning. As usual, gold has punched through fresh record territory, well past $4,000 an ounce on a combination of haven flows, a weaker US dollar, and the aforementioned US government shutdown muddying market expectations for the next Fed move. Silver is following suit, up 1% near $51 an ounce, while platinum and palladium are both higher by over 2%. An impressive run on investment and industrial demand and upward momentum heading into the Indian Diwali and global restocking. For metals traders, think about scaling into momentum strategies, but keep a tight grip on risk parameters. Parabolic moves attract quick reversals. Zooming out, keep eyes on the US-China trade tensions as tariffs are set to double November the 1st. Meanwhile, the Fed's October decision is clouded by missing inflation and jobs data thanks to the ongoing US government shutdown. Expect continued FX volatility that could spill into commodities positioning, especially for cross-border ags and metals. If you're active in oil, consider nimble tactical short plays. Grains, maintain defensive hedging and storage flexibility. For metals, participate with disciplined momentum strategies. And as always, overlay all positions with current headlines. The tape is moving faster than ever. And of course, with ENTRADE, you can instantly adapt to these shifting market headlines and manage your positions in real time, ensuring you never miss an opportunity in today's fast-moving commodity landscape. Reach out to us today if you'd like to learn how.